Welcome to your daily news impacting the markets. Apple is undergoing pressure from investors to overhaul its artificial intelligence strategy after a sharp decline in its share price this year. Apple has lost approximately $630 billion in market value in 2025, with investors increasingly frustrated over the company's perceived lag in AI innovation, Bloomberg reported on Monday. Investors are now urging Apple to depart from its conservative M&A approach and consider substantial acquisitions in the AI space. Historically, Apple does not do big mergers and acquisitions, said Atif Malik, an analyst at Citigroup, noting that Apple's last major deal was its $3 billion acquisition of Beats in 2014. However, he believes investor sentiment would improve if Apple were to buy or take a significant stake in a well-established AI company. Apple shares have plummeted by 14.45% this year, while its competitors such as Meta Platforms are thriving due to their substantial investments in AI. The company's lack of compelling AI features within its device ecosystem has become a major sticking point for investors. In February 2025, it was reported that Apple and Meta are in a race to develop AI-powered humanoid robots. Investor frustration deepened last month following the underwhelming Worldwide Developers Conference, WWDC. Critics noted the absence of major AI updates, particularly a delayed Siri overhaul. The market's response indicated that the minor updates and postponed revamp of Siri didn't resonate well. Bloomberg's Mark Gurman described the absence of any real new AI features as startling. AI cloud computing startup CoreWeave surged on Tuesday after it announced plans to invest up to $6 billion in building a state-of-the-art AI data center in Lancaster, Pennsylvania. The center is designed to support advanced AI applications and strengthen U.S. global competitiveness. Initially sized at 100 megawatts and expandable to 300 megawatts, the facility will be one of the region's first large-scale AI centers and part of CoreWeave's broader U.S. network of 33 data centers. The company will unveil the project at a CEO roundtable with President Donald Trump during Senator Dave McCormick's Energy and Innovation Summit at Carnegie Mellon University. The event brings together leaders like Governor Josh Shapiro and Senator John Fetterman to discuss how emerging technologies, including AI, can drive national innovation, economic growth, and security. CoreWeave CEO Michael Intrater emphasized the growing demand for AI compute and said this project would help accelerate innovation while creating high-impact jobs. The data center will generate 600 skilled jobs and scale to 175 permanent roles, with each job expected to spur more local employment. CoreWeave will operate the center in partnership with Teresa Technology Parks and Machine Investment Group, which will help lead hiring and community engagement efforts. CoreWeave earns revenue by leasing its high-performance GPU infrastructure to businesses and AI developers for tasks like model training and complex computing. The company secures income through multi-year upfront contracts in which customers pay for extended access to its AI-optimized cloud platform. CoreWeave stock has gained 225% since its March IPO. However, it has declined by over 23% in the last 30 days. Since May, at least 6 Wall Street firms, including D.A. Davidson, Barclays, and Bank of America Securities, have downgraded the stock's rating. In other news, renowned financial advisor Dave Ramsey has offered valuable advice to Americans considering buying a new car, highlighting the importance of making a well-informed and financially sound decision. Ramsey advises against the pursuit of the perfect car, instead urging buyers to focus on practical needs and financial constraints, reports The Street. He also suggests that buyers ask themselves essential questions such as the type of vehicle needed for daily routines, the number of passengers typically carried, and the importance of fuel economy and storage capacity. He also encourages buyers to be patient and explore various options, both online and in showrooms, before making a decision. Ramsey warns against the rapid acceptance of the first appealing offer, emphasizing the importance of finding the best fit for individual needs. However, Ramsey also offers a sobering reminder about the steep depreciation of new cars, warning that unless your net worth exceeds $1 million, opting for a used vehicle is the wiser financial move. Quote, brand new cars drop in value like a bag of rocks, losing 60% of their value in the first 5 years, end quote, he said in a post last year. The financial guru also recommends that buyers narrow their options to a handful of vehicles that align with both their budget and daily needs. He asked people to assess key factors like safety ratings, acceleration, fuel efficiency, and overall comfort, urging shoppers to prioritize practicality over simply choosing the cheapest option. The advice from Ramsey comes at a time when the cost of car ownership is a significant concern for many Americans. A January 2025 report from Edmunds revealed a troubling trend in auto financing. In the fourth quarter of 2024, about 24.9% of trade-ins used for new car purchases involved negative equity, up from 20.4% during the same period in 2023. The average amount borrowers owed beyond their vehicle's value hit a record high of $6,838, exceeding the previous record of $6,458 set just a quarter earlier. Alarmingly, nearly a quarter, 24.6% of those with negative equity were more than $10,000 underwater on their auto loans. In other news, Elon Musk artificial intelligence company X.AI has announced it is introducing its AI model Grok for government uses, as the Pentagon recently awarded the company multi-million-dollar defense contracts. The company said in a social media post on X on Monday, quote, announcing Grok for government, a suite of products that make our frontier models available to the United States government customers, end quote. The company also announced 2 new partnerships with the US government. These include a defense contract awarded by the Pentagon, as well as X.AI products being available to purchase via the General Service Administration schedule, which allows federal agencies/departments to buy approved products. The news comes as X.AI was awarded defense contracts worth over $200 million, along with companies like Alphabet's Google and Anthropic. The deal has been criticized by Senator Elizabeth Warren. X.AI has also been in the news recently amid talks of a merger with Musk's other companies like SpaceX and Tesla. SpaceX also recently invested over $2 billion in X.AI. Elsewhere, Musk has teased an epic demo from Tesla by the end of the year, sparking buzz about possible developments with the company's Optimus line of humanoid robots, as well as the Cybercab. Palantir shares closed Monday at their highest levels ever and have now nearly doubled since the start of the year. Here's a look at what's been fueling the momentum in the AI software company's stock. Palantir shares have risen more than 97% year to date on the back of AI-related tailwinds. The company continues to see strong demand for its artificial intelligence platform, which has helped it become one of the best performing names in the S&P 500 in recent years. In the words of co-founder and CEO Alex Karp, Palantir is, quote, delivering the operating system for the modern enterprise in the era of AI, end quote. Karp said last quarter that the company was in the middle of a tectonic shift in the adoption of its software. Palantir beat analyst estimates on the top and bottom lines when it reported first quarter results in May. US commercial revenue increased 71% year over year, and US government revenue climbed 45%. Palantir's customer count also grew 39% year over year and 8% on quarter over quarter basis, which includes 139 deals worth over $1 million during the first quarter and 51 deals worth at least $5 million. After the market closed on Monday, Palantir scheduled its second quarter earnings for after the market closed on August 4th. Analysts currently expect the company to report earnings of 14 cents per share and revenue of $939.71 million, according to estimates from Benzinga Pro. Analysts are divided on where Palantir shares are headed. Some analysts maintain neutral or underperform ratings following the company's first quarter results, with price targets as low as $90. Others see more room to run, with Loop Capital increasing its price target to $155 last month, and Wedbush raising its target to a street high $160 last week. Wedbush's Dan Ives sees a golden path forward for Palantir and expects the company to be a core winner of the trillions of AI spend anticipated over the next few years. At the end of May, Ives predicted that Palantir could reach a $1 trillion market cap valuation, or approximately $427 per share over the next 2 or 3 years. You cannot talk AI revolution without saying Palantir, I've said at the time. And that's been your daily news impacting the markets, brought to you by Benzinga. Be sure to subscribe, follow along daily to stay up to date.